If you're a total beginner looking to invest in the stock market, do not fret. In this video, I am going to uncover the basic things you should know before diving in headfirst. Because, well, if you're doing this on your own, just remember you're not going to be able to blame a broker in case you make any mistakes or lose money. That being said, you can totally do this on your own. I speak from experience. I can assure you, you can do this. You definitely do not need years of experience or an extremely high IQ. Hey guys, it's Diana here. Welcome back to my channel where we talk about all things finance, business, investing, and real estate. And if any of those topics are of interest to you, then hit the subscribe button down below and make sure you turn the notification bell on so you get notified when I post new content. Now let's get right into the video. The first thing you should absolutely know before you invest is, what is the stock market? The stock market is basically a place where individual and institutional investors come together to buy and sell stocks. So your next question should be, well, what is a stock? A stock is a security that represents the ownership of a fraction of a corporation. In other words, when you're buying a stock, you're essentially buying a part of the company. So if you buy Amazon stock, for example, you are now becoming a part owner of the company. The second thing that you should know is that research is everything. The worst mistake that you can make is to invest in a business that you do not fully understand or that you didn't do enough research on. One of my favorite quotes by Thomas Watson Sr. is, "I'm no genius, I'm smart in spots, but I stay around those spots." You need to identify your circle of competence. And what do I mean by that? Well, you don't need to be an expert in every company out there. You only have to be able to evaluate companies that are within your circle of competence. For example, if you're looking to invest in a biotech drug company, the first things that you should ask yourself is, well, do I know anything about biotechnology or the drug industry? Investing in some companies requires a little bit more specialized knowledge within that specific field in order to evaluate its value. Or else, how will you be able to evaluate some of the inner workings or the management principles of that company? So my biggest advice is to study the business inside and out. Analyze a company's long-term success. Look at their financial statements. Is the company's income changing? Is it increasing? Or is it relatively stagnant? How about the company's profits over a long period of time? Additionally, you should look at their liabilities, their assets, their debts. Are their assets and cash large enough to cover for their liabilities? These are important questions that every investor should ask themselves. The third thing you should know is that the stock price does not tell you anything about the company. The price of a stock doesn't tell you the full story. It only provides part of the story. When you invest in the stock market, you always have to keep the idea of value in your mind. Price is what you pay for the stock, and value is what you get out of the stock. Price changes with supply and demand, while value changes with earnings and growth. Price can be analyzed through technical analysis, and value can be analyzed through fundamental analysis. In fact, what I recommend is that for you to value a business, don't even look at the current stock price. Try to value it yourself, and you don't want to be influenced by the price. So just don't even think about looking at it. And then once you have your valuation, try to compare it with the price that it is currently. The fourth thing that you should know is that practical money skills are very important in the stock market as well. And the most successful investors are individuals that have mastered other money skills in their own lives. While you should stick to your plan of consistently investing over a long period of time, you should take advantage of opportunities, but allow these opportunities to present themselves to you. Do not go actively trying to find these opportunities, because when most people try to do this, they tend to overtrade and they fail to analyze the situation in a rational manner. So one practical money skill that you should utilize in the stock market is that when things go on sale, you buy them. So for example, you are in your local food store, you are at Costco, let's just say. Every month, once a month, you buy a frozen bag of vegetables. And it's usually priced at $10, but this time when you get there, you realize that it's $9. It's $1 off, which is a 10% discount right there. So instead of buying one, you buy two of them because you figure, well, I can just store it in the freezer. I'm gonna buy this anyway, so might as well stock up. This type of thinking will be beneficial to you in the stock market because, well, when stocks go on sale, you buy more of it. Because you know that based off of your fundamental analysis, that price is basically a steal. And as Warren Buffett says, if you buy things far below what they are worth and you buy a group of them, you basically don't lose money. The fifth thing that you should know when you are investing in the stock market is that you literally have to close your ears off to other people's recommendations and opinions of what stock to buy, when to buy it, when to sell it, and whatnot. Some people out there think that having access to some newsletter or some alert-based system is going to be enough for them to be successful in the stock market. My warning is that accessibility does not equal reliability. The internet is saturated with articles, news updates, chats, and forums that are so accessible, literally a click of a button. But they are definitely not reliable when you are trying to make decisions on your own. And some naive traders might make a few lucky trades by following these recommendations, but in the long run, they tend to lose money because, well, they lack research and they lack knowledge and they don't value a stock properly. So I beg you, stay away from all the Wall Street hype, because this is literally one of the factors that contributes to the failure of 90% of people in the stock market. The sixth thing you should know is that becoming wealthy through investing in the stock market takes time and patience. The stock market is definitely not a place to get rich quick, but what I can tell you from experience is that it is a slow but sure way to attain wealth. Investing for a year or two is not going to drastically change your life. It is a lifestyle change and should be part of your long-term investment strategy. However, that being said, it is possible for you to see really big results within 10 or even 20 years of investing. And avoid falling into the trap of boredom, because boredom is a really big pitfall for most people that leads them into losing money. They are trying to actively outperform and overtrade when in reality this is not the way to go. Just keep this in mind. Investing in the stock market is not a sprint. It is a marathon. Hey guys, I hope you liked this video, and if you found any of the information to be useful to you, please make sure you hit the like button, and best of luck to you. You guys totally got this. Till next time.